Really?
All right, just a few more minutes to go before we get started. We will give it 3 more minutes and then we'll crack on with things. All right, it is now 7 o'clock here in the UK when the webinar is supposed to begin. We'll just give it a couple of minutes for people to trickle in, and we'll get started at 2 minutes past the hour, so in 2 minutes' time. As always, if you have any questions, comments, suggestions, do leave them in the LinkedIn live stream comments. I've got them up on my other monitor, and so I can see those as they come in. All right, we'll get started in just about 1 minute from now. So stay tuned if you are already here. Just a few more seconds, just wait for more people to come in, and then we'll be getting started. Awesome, it is now 2 minutes past the hour, so we're going to crack on with things. Hello everyone, thanks so much for joining the third, I want to say, Causal live webinar. We ran a couple of these towards the tail end of last year. This is our first one of 2022, and we'll be doing a bunch more over the course of the year. So do join us for those. But thank you for joining today. Today we are going to be talking about financial modeling with cohorts. You may have heard people talk about cohort analysis, cohort modeling. You may have even seen some cohort revenue charts and so on if you're in the finance world. And so today we're going to be talking about financial modeling with cohorts. In terms of a agenda for the session today, I'm going to spend a couple of minutes just introducing myself. We'll then spend a few minutes just talking about, what actually is cohort modeling and why should we bother doing this. We'll then chat briefly about how you might do cohort modeling in Excel, and then I'll kind of show you a live demo of how you might be able to do cohort modeling in Causal, and then we should have some time at the end for Q&A and requests. So this will be one of the shorter webinars that we've done. It should be about sort of 20 to 30 minutes. And so let's get cracking with things. So I am Taimur. I'm one of the founders and CEO of Causal. My own background is mostly in maths, so that's what I studied at university, and ended up working as a data scientist. And if you want to catch me on Twitter after this webinar, that is my handle. Alrighty, so what is cohort modeling and why should we bother with cohort modeling? If we think about what modeling in general is, a model is a simplified view of how we think the world works. You might have a model on the back of a napkin doing some basic calculations. You might have a model in a spreadsheet where you have maybe a few dozen or a few hundreds of cells doing different calculations for different things. You might have a really complicated model to predict the weather based on how you think the weather actually works. But fundamentally, a model is a simplified version of the world. Now, what is a cohort model? Well, a cohort model is a simplified version of the world where you segment something in your model into different cohorts. And so if we are building a financial model, we might, for our company, and we sell to different types of customers, those different customer types might be different cohorts that we want to look at separately. If we, for example, are an app like Instagram or Snapchat or Uber Eats or Deliveroo, we might be interested in splitting our customers up into cohorts based on when they first signed up. So you want to see, for all the people that signed up in January, how did they end up behaving compared to February and so on. And so a cohort is really just a segment of part of your model. The common things that people split up into cohorts are users, typically by different types of users, for example, across different products. And really common is splitting up users by when they joined a product or when they did a certain event, like sign up or make their first purchase. You may have seen charts like this if you're in the finance world at all. If you're not familiar with this color scheme, this is actually a chart of Slack's revenue. So Slack, the sort of team communications app, this is their revenue over 2015 to 2019, and this is split up into cohorts. Now, the cohorts here are according to when the customers first signed up for Slack. And so this purple band you can see at the bottom, these are all the customers that first signed up in 2015. The blue band is customers that signed up in 2016, the green band 2017, and so on. And so I think this is a really interesting chart that really illustrates the value of cohorts. If you can imagine this same chart without the cohort bands, it wouldn't really tell you too much. It would tell you that Slack seems to be doing well as a business. The chart is going up and to the right, but it doesn't really tell you any more detail than that. The interesting thing that this cohort chart tells you is that actually, if you look at the revenue that Slack is generating in 2019, a pretty big chunk of that is coming from customers that signed up in 2015, and a big chunk of it is also coming from customers signed up in 2016, and so on. And so what this chart is telling us is actually, for a product like Slack, once customers sign up, they typically grow with the product. So customers end up paying more for Slack over time as more and more people in their organizations use Slack. And so this cohort chart is showing us a lot more information than we would otherwise be seeing. I'm getting a few messages and emails saying that the webinar link isn't working. So I'm just going to fire off some messages. To try and sort that out, if you give me a sec. So back to cohort modeling. So people are also spamming our channel with bad links on the event page. We have some spam accounts. Apologies if you've been caught in that. Our team are on it and should be dealing with these spam links, and thanks for the heads up. So the reason to bother with cohort modeling is to understand customers at a deeper level. As I was saying earlier, if we didn't have these different cohort bands for Slack's revenue, we wouldn't really understand the story about how customers sign up for Slack and grow their accounts. Another example is that if you are a product like a delivery app, let's say Uber Eats or Deliveroo or Postmates, one of the things that often happens is that customers behave differently at different points in time. And so it might be the case that when customers sign up for the app, they spend loads of money in their first month. And then there's a big drop off after that first month. And so if you're building a model for your customers and things like churn rates are not constant over time, or things like expansion rates are not constant over time, you really need your model to be able to split your customers into different cohorts so you can apply the correct churn rates, retention rates, and so on at different points in time. And so cohort modeling is really crucial when aspects of your model actually change over time. And in the case of Slack, for example, the amount of money that a user is paying Slack is actually increasing over time. And so to model that in, you actually have to track that user group or that user cohort separately. So that's why we should bother with cohort modeling. It's to really understand at a greater level of detail what's going on in our business. If we were Slack and we didn't look at user cohorts, we might have just thought that, okay, we should spend money on acquiring net new customers. We should focus all of our efforts on acquiring net new customers to grow our revenue. Well, actually, it's probably worth, as a company like Slack, trying to figure out how can we get each customer to grow their account a little bit more. Those dollars would probably go a much longer way. And so cohort modeling is about getting into the next level of detail in your model. Now, how would you do cohort modeling in Excel? The truth is that it's actually really hard to do cohort modeling in Excel. You're going to end up with lots and lots of really complex formulas. This is an example of probably one of the simpler formulas that you might see in a cohort model in Excel. You're going to have to do index matches or VLOOKUPs. You're going to have lots of duplication. You'll have a separate formula for every month for every cohort, and so that blows up really quickly. If you then have multiple products or different sort of countries and so on, the number of formulas that you'll have in a cohort model in Excel will be in the thousands or the tens of thousands very easily. And if you want to make a change to your model, if you want to change how you're modeling things, you'll probably have to go in and change things in a bunch of different places and make sure that you don't mess up these kinds of formulas. So cohort modeling in Excel is really tricky. I did actually try and find an Excel cohort modeling template, but there actually aren't any good ones out there because it's so complex. And so a lot of people actually just don't really bother with cohort modeling in Excel. So that's cohort modeling in Excel. Very tricky to do, not for the uninitiated. Let's take a look at how we could do cohort modeling in Causal. And so for those of you who don't know, Causal is a sort of very general number crunching tool, a bit like a spreadsheet, but we hope to solve some of these problems around sort of unreadable formulas and lots of duplication and so on. And so we hope that Causal can be a much better way to do calculations and build models than something like Excel or Google Sheets. So let's now move over to Causal and build an example model and see how we can build cohorts into the model. So this is Causal. This is a blank model that we've got set up. A couple of things to point out. The first is that we can set the time range for our model. So we're going to say that this model begins in January 2020 and ends in December 2023. So this model spans 4 years and it's a monthly model. Based on these time settings, Causal's automatically generated these different columns for the different months. And now we can start building our model. Models in Causal are split up into different variables. So these are kind of like rows in a spreadsheet. And so if we think about our model now, suppose we run a business, let's say it's some kind of mobile app across iOS and Android. And the way we acquire customers is by spending money on ads. So what we can do first is we can create a variable which will represent how much money we're spending on ads every month. So we can call this our marketing spend. What we can do is now set a different value in different months. I'm just going to tell Causal that we are going to have different values in different quarters. And so I can go to this recipe and this will let me separate this out into quarters. And so I can go in here and say that maybe in the first quarter, we'll spend 10K and then 12K and then 14K, 18K, 20K. And I might tell Causal that it's actually just going to stay at 20K for all the rest of the months. And so, Causal is really as flexible as a spreadsheet. We can go into any of these individual cells and change the value. We could say that actually it goes up to 25K in June, and we can kind of drag that across. So we have a marketing spend in the different months of our model. The next thing we need to know is for each dollar we spend, how many customers can we actually acquire? And so this is often called the customer acquisition cost or the CAC. And so we can set a value for this, and suppose it costs us maybe $2.50 to acquire a customer. So this is our CAC. Great. So with our marketing spend and our CAC, we can generate new customers every month. Customers will also kind of leave us every now and then. Unfortunately, customers will churn, and maybe we know that our churn rate is roughly 5%. So we can set a churn rate of 5%. So all we've done so far is create a few input variables or assumptions. These are just hard-coded numbers. We haven't done any calculations yet. So we're saying that we spend some money on marketing. We're saying that it costs us $2.50 to acquire a customer. And we're saying that every month, 5% of our customers leave. Let's now start doing some calculations to build this out. So now, based on the marketing spend and the customer acquisition cost, we can work out our new customers. And the new customers is simply going to be the marketing spend divided by the CAC. So this will tell us how many new customers we get. And we can see that Causal's now done that calculation for us. We get 4,000 for a few months. It goes up to 4,800, 5,600, and so on. So one thing to note is that all we did is write a single formula, a single really easy to read formula, which is marketing spend divided by CAC. And Causal has done this calculation now for every single month of our model. We don't have a separate formula for each of these cells like you might do in a spreadsheet. And so our model stays much simpler. Excellent. So we have our new customers. We now want to keep track of how many customers are churning every month and what our total number of customers is every month. And so we can create variables for churned customers and total customers. And if we think about what we want to do for total customers, every month we want to take the previous number of total customers So we can refer to that directly in Causal by just typing the word previous. So we'll refer to total customers in the previous month. We then want to add on the new customers that month. So this is the new customers in the current month. And then we want to subtract the churned customers. So this will keep track of our total customers over time. And we just need to set a formula for our churned customers. And in this case, we're going to take the total customers from the previous month. So total customers, not current, but previous. And we're going to apply the churn rate to that. So that's how many customers are churning every month. And we'll just tell Causal that all of these things need to be integers because we can't have fractional customers. And so now you can kind of see a bunch of different numbers going on. Just to round things off, we might have some amount of revenue per customer every month. Maybe that's $50. And we can work out our revenue, which will just be total customers times. What we might now do is create a bar chart to see our revenue and maybe summarize all of these things in a table. Excellent. So we now have a bunch of different metrics for our business, and we can see some charts. We can play around with these things. Causal makes it super easy to do this kind of stuff. We didn't have to write formulas to do any of these different chart manipulations. Great. So we don't actually have cohorts in our model quite yet. So how would we add cohorts into this model? The way to do that in Causal is actually write in the formula. So Causal makes it easy to work with cohorts in your formulas. So what we essentially want to tell Causal is that instead of just doing this calculation, what we want to say is that if the current date is equal to the start of a cohort, then we want to do that calculation. So if the date is at the start of a cohort, then we bring in that many new customers. And if we're not at the start of a cohort, then we don't bring in any customers. So Causal has these helper variables like date and cohort that make it really easy to do these kinds of calculations in a very readable way. So let's hit enter and see what happens. Cool. So you'll notice that a bunch of different things have gone on now. The first of those is that our new customers row actually has a little arrow next to it, and we can expand this out. And if we click on this arrow, we can see that Causal has now broken this out into a separate cohort for each month of our model. So this is pretty interesting. So we can see that we have 4,000 new customers coming in January, 4,000 in February, and so on. But these are all being tracked separately for each cohort. So just by changing this one formula, Causal has now automatically generated a cohort for every single month of our model. So that was really, really easy. We'll also notice that we have arrows next to these other rows as well. And so if we take a look at our churned customers, we'll see that Causal has automatically generated cohorts for our churned customers as well. And you can kind of see this sort of decaying curve as each cohort of customers churns over time. And finally, for total customers, we kind of see the same thing where Causal's automatically generated these cohorts for total customers, and we can kind of see that a cohort begins with a bunch of new customers and then eventually kind of churns over time as those customers leave us at a rate of 5% per month. Now, what's actually gone on there? The way this works is that we introduced cohorts into our new customers. So this is where we wrote the formula that told Causal, hey, we want to do some cohort modeling here. And so we wrote this formula, and that affected new customers. Now, the interesting thing is that the total customers depends on the new customers. So the formula for total customers looks at the previous month's total plus the new customers minus the churned customers. And so Causal knows that, hey, our new customers now is dependent on the cohorts. Therefore, our total customers must also be dependent on cohorts. And so without us having to change this formula, Causal has automatically started tracking these cohorts separately for the total customers. And since our churned customers uses our total customers, Causal is automatically tracking cohorts for that as well. And so you'll see that all we had to do was change a single formula in our model, and we now have cohorts generated across in this case, 48 different months of our model. This would have taken 48 squared formulas in Excel. So this was for each of these variables, this would have taken 2,304 formulas in Excel. And so what we have in, let's see, 1, 2, 3, 4 formulas would have taken us 2,304 times 4, so about 10,000 formulas in Excel to do the same thing. And our revenue is actually also being tracked per cohort. And you can kind of see on our chart as well, we have these different bands for the different cohorts going on in our model. And if we wanted to add cohorts to the table, we could do that as well. So just to kind of summarize what we've done so far, we've kind of created a really simple model. We have some hard-coded assumptions about our business. We spend some money on marketing. We have a customer acquisition cost, a churn rate, and a revenue per customer. We have new customers per month broken out by cohorts, churn customers per month broken out by cohorts. And you can kind of go and see what all those numbers look like, and a couple more metrics. And it's all driven off of really just 4 formulas: 1, 2, 3, and 4. So that's how easy it is to build a cohort model in Causal. So this is kind of level 1 of cohort modeling. So we have like a really basic model here. The next thing we might be interested in doing is actually introducing some historical data. Right now, the model is purely built on assumptions, and some of these assumptions might not be true for previous months or future months. The good thing about historical months is we do have the data for them, and so I've got a Google Sheet here which just has some example sort of dummy cohort data where we can kind of see our new users across different cohorts across different months, and we also have our churned users across different cohorts, across different months. So we have historical data. This might be coming from our data warehouse or some kind of other internal system. Let's see how to connect this up to pull it into Causal. So what we can do is we can click on this data sources button. I've already connected this Google Sheet, but that's really as simple as clicking a button, selecting a Google Sheet that you want to connect to, and then selecting the tab and then hitting create data source. We'll see that Causal is now pulling those things in. So Causal has detected that we have 2 different things in the Google Sheet. We have churned users and we have new users. And this is in the Google Sheet, this is broken out into Android and iOS. We don't have that in our model right now. So Causal is pulling in these numbers, and what we can now do is start connecting them up to our model. The way to do that is really simple. We can just hover over one of these variables. We can click on the data button, and then we can select from a drop-down what we want to connect it to. In this case, we want to connect it to the new users from our example cohort data, and so we'll do that. And for our churned customers, we are going to do the same thing. So we'll connect this to the churned users from our example cohort data. You'll see that a bunch of things have now changed. I'm just going to hide the charts for now. The first thing that you'll see is that the little sparkline summary is now changed. This is because Causal is now pulling in the historical values when they exist. And so you'll see a little data icon in some of these cells. This means that these values are actually coming directly from the Google Sheets. These are not being calculated by our formula. The Google Sheet value is overriding this. And so until October 2021, we have historical data for new and churned customers. And that's why we're seeing the data icon. And you can see in the sparkline that we kind of have all this wiggly line going on for our new customers, and then the dashed line is where our formula begins doing the forecast. So again, we didn't have to change any formulas. We still have a single formula for this. Causal overrides the formula with the historical data. And the cool thing is that without any extra configuration, Causal is automatically understanding that the data is broken out into cohorts. So Causal is pulling in this historical data on a cohort basis in just a couple of clicks, and we can see the same for our churned customers. It's obviously a bit more random in real life than it was in our purely assumption-based model. And all of that is flowing through into our total customers and our total revenue. You'll see now that there's a bit more kind of randomness in there where we're pulling in the historical data and then doing the forecast afterwards. So that's how simple it is to connect historical cohort data to Causal, and that will then flow through into all the different calculations of our model. So we've connected some data up. What we might be interested in doing from here is presenting this model to different people. We can generate this kind of dashboard, and Causal does this automatically. We can then play with different assumptions and see, hey, what happens if our churn rate actually goes up to, say, 15%, and Causal will rerun this model, and everything will update in real time, as you've just seen, or say 5%, and so on. And so this is a safe place for anyone would give access to play with this model, understand how these different assumptions change things, and it's super easy to build these kind of models. Maybe just to show you a little bit more about what you can do. Right now we're just assuming a certain churn rate. We might actually be interested in calculating that based on our historical data. And so instead of assuming this to be 5%, what we can say is that we want this to be the churned customers divided by the previous number of total customers. And now you can see that Causal is sort of working this out separately for each cohort. So you can see the monthly cohort churn rate. So a single formula has worked out all of these monthly cohort churn rates for every single month. We'll probably make some tweaks to this. And so we can do something like this. We can say that if our new customers, or rather our churn customers, is coming from data, then we want to do this kind of calculation. Otherwise, we just want to take the previous value of our churn rate. And so we can do this kind of calculation. And it looks like that isn't quite working. If is data. All right, let's see why this isn't working. Got it. Maybe to simplify things, we can just say that if the date is before October 2021, which we know is kind of the final date value, so 2021, 10, that. And so now we kind of have this churn rate being calculated based on the historical data until October 2021. And so you can see all these different values, and then it just stays as the previous value. So it's staying constant at 13.7%, and for these different cohorts and so on. And so we have the churn rate based on historicals, and we can kind of project that forwards. If we wanted, we could do more complicated things. We could try and take an average of the churn rate over the past 3 months or something. So we could write something like this. This will take the average of the churn rate over the previous 3 months. And so now if we examine some of these numbers, you'll see that until October, it's historicals, and then it kind of averages out to a single number over time. So you can do all sorts of calculations in Causal. It's really as flexible as a spreadsheet, but hopefully with a lot fewer formulas. So this is how you might build a cohort model in Causal and connect it up to data. This is obviously a super simple example. You can go into as much detail as you want. You can then run scenarios on this. You can easily generate different scenarios. We have version control, different permissions. You can link different models together. You can sort of save different versions and track how they compare to the actual data over time. All of that kind of stuff that you'd expect from a modern financial modeling tool. And so this is how you would do cohort modeling in Causal. Thank you so much for listening. If you are interested in doing this kind of modeling, I'd recommend going on causal.app and checking it out. You can just sign up on our website and start playing around. If you'd like a personalized demo of Causal and you're a finance team at a high growth company, I'd love to chat and show you a personal demo. Drop me an email at taimur@causal.app. And if you'd like to follow along as we develop the product, follow us on Twitter at CausalHQ or follow me at Taimur Abdal. Thanks so much for listening, and do keep a lookout for our future webinars.